The one to watch, I think, is the dollar. The dollar is really important, and the dollar is very strong. I do expect the central banks to try and slow it down at some point, but the dollar going up basically creates credit issues for the global economy. We've already seen places like Nigeria running short of dollars. We're seeing it in Sri Lanka. We're seeing it in the periphery. It always happens in the periphery first and then comes back. So there is liquidity issues further out in the system. So just keep an eye on the dollar. The more the dollar goes up, the more liquidity issues you're likely to face, and the world struggles a bit. So just keep your eye on that.
Real Vision CEO recently granted an interview where he talks broadly about his outlook for gold, other commodities, and the US dollar. In his interview, Raoul Pal mentions that the US dollar and gold are worth looking out for as they are showing signs of strengthening. He explains that we are in a petrodollar system based around the use of the US dollar in the global crude oil market. Previously, the United States imported a lot of crude oil in exchange for the dollar. But since it became self-sufficient and reduced the importation, the system is not getting the needed supply of the world's reserve currency. This means the dollar is becoming scarcer and stronger compared to other fiat currencies. Raoul Pal also talks about the supply and demand imbalance for commodities, inflation, and how fast the world will be able to transition to renewable energy to stop the dependence on countries like Russia. Welcome back to Savvy Finance. Please watch the video and smash the like button. A big thank you to all our viewers and subscribers.
Look, there's big picture things. I covered gold in the update that I did, which is right now you don't know who owns what assets. You don't own anything because the government's taken it away from you, which is we've kind of known, but it's been writ large in the last few weeks. And I think even though gold is coming off because it had a good squeeze higher, I think we're going to see more action there. The one to watch, I think, is the dollar. The dollar is really important, and the dollar is very strong. I do expect the central banks to try and slow it down at some point, but the dollar going up basically creates credit issues for the global economy. We've already seen places like Nigeria running short of dollars. We're seeing it in Sri Lanka. We're seeing it in the periphery. It always happens in the periphery first and then comes back. So there is liquidity issues further out in the system. So just keep an eye on the dollar. The more the dollar goes up, the more liquidity issues you're likely to face, and the world struggles a bit. So just keep your eye on that.
Basically, this notion of what's happening with the dollar keeps rising. Give us your context on that and how it ties in with what we just heard.
So this is going to tie back to Bill Tai as well. So Bill Tai talked about petrodollars and electrodollar, and that crypto is the electrodollar based around electricity, while the petrodollar was based around supply and demand for oil. So we've been in a petrodollar system since we floated off the gold stand. Now, what does that mean? It meant that the US was one of the biggest importers of crude oil in the world, if not the biggest importer. So they would spend dollars, and these dollars floated around the global system, keeping it liquid. But the shale oil revolution, as Russell points out, did the opposite. It meant that the US didn't need to import as much. Yes, it has to import some different grades of crude and stuff like that, but generally speaking, it's self-sufficient in oil. So that is a lot less dollars into the global system. So if there's a lot less dollars in the global system, the dollar goes up. It's like ETH burning. It's like Bitcoin supply. If there's less dollars sloshing around the global system because the US aren't spending it, it drives the dollar higher. And that's one of the things that the dollar's strong for a period of time.
And the question is, would love Raoul's thoughts on precious metals and commodities in the near and medium term.
I understand the thesis. People like Tracy Shuchart talks about, Tony Greer, that there's a big commodity supply issue and a reasonable amount of demand. I think the demand side of the equation will be weaker going forwards. I get the structural issues. I don't like owning commodities in spiky markets like this where you get news flow and it falls 20% overnight. I think that's hard. Commodity producers, maybe you've got a better opportunity, but they've been very spiky. So if you're not in the trade, it's not a trade I can enter now. The pressure, and are we in a commodity super cycle? The answer is I don't know. It's possible. We're due one at some point. I just don't know where the demand side of the equation is, except for ESG demand. So I can see the copper side, the nickel side. There's a whole bunch of these things that are very important in that. And so, with this reduced supply and normal demand in crude, I can understand the prices might remain high. Yeah. Precious metals, as we talked about, in a world where money's getting confiscated, in a world of inflation, of a world of geopolitical risk, it's got to be good. I mean, gold made a new high, backed off it. It probably consolidates for a while. And then if I look at the long-term chart of gold, particularly the inflation-adjusted chart, it's a giant cup and handle formation. And my guess is gold goes to 2,500.
Yeah, really interesting. I was actually thinking about this earlier. It's like the Tony Greer trade and the Cathie Wood trade. I think they may both be right, just on different time horizons.
That's always the case. That's why I find it ridiculous that people insult each other for, I'm a commodity person, that's a tech person, those guys are idiots. It all worked in the right way at the right time. I've been waiting to buy these blown up tech stocks ever since I talked about the exponential age thesis. I've not bought any of them because they were 2 standard deviations overbought versus the log trend. And I've been waiting to get to 1 or 2 standard deviations oversold. And lo and behold, that's where we are now. So I'm kind of looking at them very actively and looking for a change in the macro to buy them.
Yeah. By the way, talking of Tony Greer and Tracy Shuchart, we did a terrific Real Vision Twitter Spaces yesterday with those two. Had a couple thousand people join us.
Yeah, I mean, they're both amazing. I love them both.
Raoul Pal also addresses the issue of whether Bitcoin will become a medium of exchange and a reserve currency as widely used as the US dollar. This is an issue that has caused a lot of controversy in the crypto community. While many members of the community believe that it is inevitable, others believe that governments will not allow such a strong competition for their fiat currencies. Raoul Pal explains why he belongs to the first group and when he thinks the transition will occur.
How will the continuing supply chain snarls impact crude, other commodities, and inflation?
The answer is I don't know. I'm not the expert. I've not been focused on the commodity trade. Again, Tony, Tracy, others like that have been all over that. So I would stick to their advice as opposed to mine.
Yeah. Here's an interesting question that comes to us from Angela W. Raoul, we're strong believers in crypto as macro and the exponential age, yet men we respect like Mike Green and Russell Napier firmly believe that ultimately governments will not permit competition to the sovereign fiat. How do you reconcile those two conflicting viewpoints? Boy, just what we were talking about.
I don't think it's all about money. It's the internet of value. That's why Web3 has become the narrative. So Bitcoin is a different beast and it's more of a reserve asset. Does it turn into a fully fledged medium of exchange and currency? Yeah, but that's not happening for 20 years. It's possible. I doubt it because governments want to own their supply of money for their own community, like everybody else is going to have tokens for their community. But, I think as a reserve asset, Bitcoin works. But what we're actually talking about is the way of storing, transferring, and recording ownership and value in the digital age. Governments are not going to get in the way of that. The president made it pretty clear that it's all fine. They just want to make sure it's regulated.
Yeah. By the way, really big news coming out of that executive order in terms of just the framework. I was joking that, the ultimate impact of that is that we have a bunch of government working groups writing reports, but it's the signal that it sends about some of the things, some of the wording we heard in that, talking about the future of money, talking about U.S. remaining competitive by being involved in these digital assets. Really interesting language.
Yeah, and I also thought they remember I've had a few rants about the fact that the SEC was trying to stop people participating in this. It felt inclusive language, and I thought that was really important, that they kind of acknowledged that this is an opportunity for the broader public and they can't not allow it.
Great news indeed about Biden's executive order. The United States is a world leader and its acceptance of cryptocurrencies will positively impact the crypto space. Soon we believe many other countries will become less critical of digital assets, leading to wider adoption and better price actions. Back to the interview. Raoul Pal talks extensively about inflation and its impact on bonds, bond yields, and gold. And in the last part of the interview, he addresses the issue of transitioning from fossil fuels to renewable energy.
If anybody had ever told you 10 years ago that inflation was going to be at 8% and bond yields were going to be sub 2, they'd have laughed in your face.
Yeah.
So it tells you there's something people don't fully understand about.
Yeah.
And it's about the forward inflation expectations driven by demographics and a debt super cycle. So my view is higher inflation is disinflationary forward look, and the bond market is telling you something.
Yeah, by the way, you could say the same thing if you would have said 8% inflation and gold is under $2,000 right now an ounce as we have this conversation.
That's right. Again, we think we know, and these are all narratives, right? Everything we have is a narrative. And so, memes rule the world, and gold as an inflation asset was a meme that's ruled since the 1970s because it worked. But maybe that wasn't the only reason gold worked. Maybe there are different. So people need to be open. And I think part of it is the denominator idea. So, once you took gold off the dollar off the gold standard, you're changing the denominator as opposed to just about the inflation numbers. So there's a lot to pass out. And nobody knows the answer. I don't know the full answers, but I know demographics probably explain the majority of it.
Yeah. Here's one that comes to us from the Real Vision website from Peter Lim. Raoul, what are your thoughts on EU carbon credits?
Yeah, they got smashed, and I'm still long. I love them. I think it's an amazing trade. So how I pass through this is, okay, the Europeans know they have a problem having dependency on foreign oil and gas. They're going to have to cobble together something, whether they do a backdoor deal with Russia or try and get more in from Algeria or figure out how to get it from Turkey. anything to keep it going. But given this shock, the one thing they have to do, get off oil and gas. So I do not think they're going to waver in their application of the EU ETS carbon system. I think they need utilities, power producers, manufacturers, shipping, and all of the things that come under this to start allocating their efforts on greener energy, which is driving an investment cycle as well. And I know I see people all the time laughing at it. It's like, you know what? The world without having to use oil and using abundant sources is a better world. Now, that doesn't happen overnight. And that creates these supply issues because you're pushing forward the narrative of ESG or trying to reduce the narrative of fossil fuels, but you've got a mismatch. And you're going to see these kind of squeezy prices until that happens. But over time, we will see a lot of technological advancements. People say, well, it's impossible. It's impossible right now to generate that much power. And obviously, nuclear is the other one that's going to come into this. And I don't think that's going to, I think that will be allowable under ESG because they have to. And that between nuclear and green energy, you scale massive. It's not going to happen overnight. It takes a while to build the nuclear power.
Yeah, and to your point, I think economists call these intertemporal trade-offs. You have these weird time horizon things where you can make mistakes with policy by trying to withdraw too quickly, for example, from fossil fuels when there's not the technology to do it. But that doesn't mean in the long term that this is not the direction that everything and everyone is heading.
That's right. And the digitization of everything is the trend of the world, and moving away from burning fossil fuels to digitizing the sun's energy is where we're going. And I don't think anybody should have a problem. It's not a philosophy, for God's sake. It's just a efficiency over time. Now, when we first started it, it was much less efficient. The governments had to subsidize it. Over time, it's become cheaper, even without subs. So it gets more efficient over time, and that should continue to happen, where the cost of electricity ends up falling and falling and falling. And there's no philosophy to do with that. It's just a straightforward technology advance.
Thanks for watching the video. Please let us know your thoughts and observations in the comment section below. And remember to hit the subscribe button and like the video.